Good morning, Paul Georgie from Allendale. It's January 20th, Friday morning, and we got a big day around here at Allendale today. The Allendale Conference starts at noon today, so we're preparing for all of you that are coming in to enjoy it with us. We promise to have a very educational and a lot of ideas that you can take home and hopefully use in your production and your strategies in trading. Markets this morning, we've got grain markets mixed. Corn has recently come back a little bit off of the lows. Close in the overnight session about a penny higher. Soybeans a little lower. Wheat steady mixed. News to focus on here today is again the macro markets are dominating the news wires with the G20 meeting finishing up today in Mexico. The idea there is that the IMF will get some funding to support the economic problems in the pigs country. So that is and has been providing support for the euro currency, and in turn putting pressure on the dollar. There's also hope and rumors that today that Greece is very close to ending the negotiations of its debt with the creditors and trying to secure some longer range adjustments there that will save them from default. So that news has been continuing to support the euro dollar, and today we're getting just a little bit of adjustment. We've seen the last 3 days some very sharp sell-offs in the dollar or strength in the euro currency. So going home over the weekend, seeing some adjustments there. Other news: China is also wrapping up their year. It's New Year's Eve there. They will be closed. They're on holiday all next week, so don't expect too much excitement from China next week. They did release their industrial data, show that they're continuing to show a slowdown, which is also providing a little bit of strength here for the dollar. The weather situation, South America seems to be getting some rain. Argentina should get some rain today into Sunday, and then moving into southern Brazil. You can get all the details on that as Drew Lerner is going to be at the conference this afternoon, giving a full forecast for 2012 here in the U.S., and I'm sure he'll be giving us details and some projections on the South American situation as well. Also, the government in Argentina has announced that their planting is continuing, where there's some planting of late season corn and soybeans, and actually the Ministry of Ag down there has suggested there will be more corn acres planted than they earlier had thought. So seems to be improving in South America, so not a focus there. Now we're focusing on demand. The USDA has released the weekly export numbers this morning. Corn, 759,000 tons. They were looking for 500 to 850, so well within the range. Wheat, 585 was the USDA number, looking for 350 to 600 in the trade, so neutral number there. Soybeans showed some above the range, where they came in at 991. Compared to 500 to 900. There's been a lot of rumors here in the last couple days, reported by newswires yesterday, that China bought as many as 20 cargoes of soybeans in the last couple weeks. Well, the USDA has only reported 2 of those cargoes yesterday at 120,000 tons of beans sold. We'll be watching here at 8 o'clock again this morning to see if they give us any update on sales of soybeans to China, but we'll just have to wait and see. But they certainly haven't given us that indication that there has been some major sales, but certainly could be a reason for justification for that nearby soybean contract to be relatively strong compared to all other markets. Over in the cattle, we've seen a real strong close yesterday in the futures. Overnight, we're up sharply again. Fed cattle are up $1.45 as we speak. The idea there is that the packers are going to have to come out and pay higher money for cattle today or this week. They haven't traded anything of any size here up until today, so hopefully they will pay higher money and justify the strength that we're seeing here in the futures. We're getting an indication from looking at slaughter numbers. The packers have cut back slaughter considerably, even in a short kill week. They've cut back on slaughter, and the main reason for that, you would think, is the supply of cattle. We just don't have the supply of market-ready cattle, and they don't want to pay the high price. And their margins are very much in the red, so another reason to slow down slaughter there. Cutout values were mixed. Choice was down a little. Select was up a little on Thursday's final report. The hog complex, they're kind of following along right now. Overnight, we're seeing some gains. Most of what we lost yesterday, we're gaining back in the overnight session in the CME lean hog futures. So there tends to be and will be a lot of opportunities here today and into next week. Expect a lot of volatility. We suggest you stay in touch with Allendale, and those of you traveling to get to the conference. It's not snowing here in Illinois yet, so should be safe travels. We hope to see you here, and we wish everybody a very successful trading day, and we'll talk to you on Monday morning.